Welcome. I'm Catherine Magana here with Greg Carroll and Vince Stefano, where we're here to provide you insights on the markets, planning, and much more. Today is May 7th, 2026, and I just celebrated my 26th wedding anniversary yesterday.
Yay. Here, here.
Yes,
right.
I think I'm still behind you guys.
Congratulations.
But,
far.
You're
catching up. Congratulations.
Yes. We ended up going to a Yacht Rock festival last weekend, which was kind of fun. And I know we did our Yacht Rock barbecue event for WWM, so we had our outfits to pull out, and it was definitely a lot of fun. But I thought I'd start.
Like fun.
Yeah, I thought I'd start with some positive news. But and so here we are. We are in S&P 500 is having some of the best earnings. We're still having hopes for the peace between Iran and the U.S. So still some of the same and some of the not the same. But it seems like the markets are definitely in positive territory right now. As of yesterday's close, so yesterday was May 6th. The Dow Jones was up 3.84%, which was up over 2% from last week. The NASDAQ was up at 11.17%, over 5% gain from last week. The S&P 500 is at 7.59, and that was up over 3% from last week. And the biggest movement up was the Russell 2000, which is the small cap stocks. Year to date, 16.31%, up almost 6% from last week. So obviously, we're still seeing some positive territory. Happy to be in the green for year to date. And so obviously, what we're seeing right now is the S&P 500 companies. There's 84% of them have beaten earning estimates, and 81% have beaten revenue estimates. And the Q1 earnings was tracking at 27%, up from 13% end of last quarter. So we're not seeing any revisions down. Obviously, everything seems like it's growing, and so their earnings are coming in very strongly. And
Those are big numbers.
Yeah, I'm sure Vince will talk about that a little bit. So just giving you an update on a couple other numbers. So the kind of Fed rate hike, we don't anticipate a change coming up at the next meeting. However, the odds of a rate hike this year is at about 17%. And then looking at mortgage rates, they've been kind of going up and down, fluctuating a little bit, not too much, but right now, as of this morning, we are at about 6.47%.
So you said a rate hike is 17%.
For the year.
Wow.
Yeah. Some odds of, yeah.
What are the odds of a decrease in rates?
Probably zero.
Well, yeah,
I would think zero.
Well, I don't know. I thought the dot plot or whatever was still showing, lowering rates once or twice.
I'm just seeing an odds of a rate hike right now, and then no change at the next meeting. But that seems to fluctuate a lot. I mean, I've heard different things. We heard 2 rate cuts, and we heard no rate cuts, and 1 rate cut, and so I'm.
And a lot of it depends on this war, the price of oil and gas, which is, one of the reasons they take that out of a lot of inflation factors because they're so volatile, right?
Yeah.
And the sooner we get that over, the sooner prices can come down a little bit.
Yeah. And then looking at the kind of 1-year CD and Treasury rates, right now our 1-year CD is at about 3.9, and our 1-year Treasury is about 3.8%. So not too much change over the last week for that, but slight changes there. And then the only other thing I want to share was kind of where we're at with the Fear and Greed Index. So last week we were at greed at 64, and this week we're at greed at 70. So
Wow.
if you look at that,
Here.
yeah. And so
we had those big jumps in the last week, I
it
suppose.
was. And I was looking back on March 20th, we were at extreme fear at 18. So in just several weeks, we've seen a big shift, which we've obviously seen in the markets and seen some of the stocks do very well. So I can't complain. I mean, looks like I said, earnings have come in pretty strong, and we're off to a good start this year.
I was reading some stuff on, when the war or conflict, whatever we want to call it, first broke out. They're talking about when these types of geopolitical events happen, that the markets are always or almost always up 12 months later. They talk about how it goes down a little bit, and then it's a good time to buy. Well, if you had bought when the war started. You go back to March 1st, the NASDAQ is up 14%.
Wow.
Russell's up 8.2, S&P up 6.9, and the Dow is the laggard at 2%. Yep. But that's since it started. And then if you just go fast forward to the end of April, a month later, I mean, the NASDAQ's up 23, The small caps up 16 and change, S&P up over 15, and the Dow up 10.
Yeah. A lot of market volatility, a lot of movement in a short period of time.
That is a lot of movement.
Yeah, and a lot of that is predicated on what Catherine had said earlier about earnings and how good this earnings season was. And it's been the best earnings season since 2022. And, they're talking about the remainder of this year continuing to be strong, and there could be a 12 to 15% continued increase in S&P earnings. But it's not just the mega cap tech stocks or the semi cap equipment chip stocks that have done incredibly well. It's the broad market. I mean, you look at manufacturing, you look at industrials, you look at a lot of companies that are outside of the tech sphere, and they've had terrific earnings and not only for the first quarter, but they guided Q2 and the rest of the year up. So it's kind of interesting how a lot of people thought that this war was going to bring us into a big issue with companies, but the companies are doing quite well. And as I have to say, and we always say on this program, the market is driven by corporate profits. And, what you do see is these short-term events like you had mentioned, Greg, where the psychology takes over and you get a lot of near-term corrections, but then the market refocuses once again on earnings and profits. And you've seen what's happened this quarter and how these stocks many of them have just gone parabolic. But what's kind of interesting, there's still a lot of undercurrents about what's going to happen going forward. And, you've got issues. How long is this war going to last? You touched on that earlier. Reopening the Strait of Hormuz may take time. And if during that time, oil prices can continue to rise, and we're seeing them fluctuate all over the place. They were down quite a bit early this morning at the market open, but then news came out and they started rallying during the course of the day, and right now, most of the futures are up very slightly, but they were down almost $10. So you can see how quickly they move around. And the big issue is what's going to happen with these oil prices. Will they push the world into a global recession? I don't think it's going to happen, but it could, because so many of the European and Asian companies were very dependent on Mideast oil, where the U.S., because of our energy independence, we're much more shielded. So we got a little buffer on that. The other thing is the diminished rate cut. Everybody thought we were going to have a rate cut this year. It's diminished. You just mentioned there may be a rate increase. I don't know if that's going to happen. But with all of that said, and with all of the gains we've seen in some of these technology companies, and you all know I'm a big fan of technology. Depending on what your risk tolerance is, if you own a lot of these chip stocks and semiconductor equipment companies, and you're feeling like, hey, we've had a great run, maybe you want to take some profits off the table, kind of move into some other sectors. If you don't own some of these companies, I would not be chasing them up here until you see they're probably going to have a little bit of correction simply because they've run up so much. But again, I think that they are going to be the companies that you want to own for the next couple to 3 years. So again, it depends on kind of like your investment tolerance, where we are now. And again, there's nothing wrong with taking profits, and no one ever goes broke by taking some profits.
So just to clarify about the rate hike and cuts, so the odds of a rate cut this year was 17%.
Oh, a cut. Okay.
But I did think I said hike, but so I want to correct myself on that. And then the chances of a hike fell to 14% from 30%. So basically, if there's a rate hike, that fell from 30% to 14%.
Oh, there was a 30%
So there's
chance
for a thought of a rate hike. That's interesting.
So
Yeah,
I just wanted to clarify that.
Okay.
I would-
Just to, kind of going off what you're talking about, Vince, with the run-up that we've had and maybe taking some profits off the table is a good thing. And, some people might be coming into some cash or retiring and trying to figure out what to do with new money into the market. We've talked about these buffered ETFs in the past. I think it's a good place to step into something that gives you some protection. And just to give you an idea, for a 12-month buffered ETF, you get a 10% downside cushion where you're not exposed to the market at all for that first 10% down over that coming 12 months. And your upside cap currently is in the 12 to 14% range. So that's pretty good. When you're at all-time highs, I mean, I think most people would be okay if the market went up, 15, 16% next year or the next 12 months, and you get 12, 13%. It's a pretty good deal.
Is there a maturity on that, or is it, what is it?
And they reset that every 12 months. So every month they have, the next one with this particular firm is starting the May version. But they also have 15% buffers where you get 15% cushion. And that upside cap for the next 12 months is in the 10 to 12% range. So still, historically, very good numbers. And we've had such a strong rally during this conflict that for new money, maybe that's a place to diversify a little bit if you're not induced to buy these tech stocks that Vince is always so been very correct about, but can be a little more volatile. And one other area is, I was reading a report from Goldman Sachs, and one of the biggest beneficiaries from the AI infrastructure movement or AI intelligence has been emerging markets. It said over the past few years, emerging markets have emerged as one of the key beneficiaries of AI infrastructure investment, with EMs accounting for 2/3 of global semiconductor production. Demand for AI hardware has continued to surge as well, with South Korean exports alone rising from $20 billion in December to $30 billion just last month. And with AI capital expenditures expected to reach $1.7 trillion in the next 5 years. That's going to continue to drive a lot of EM countries, economies, and the firms that are based there. So, I think a lot of people, EM has been tough to own for the last 12, 15 years. But, they did quite well last year, and they're doing pretty well this year. So maybe if you don't have exposure there, there's another place that may have some room to run as well.
I would say also international.
And
has done pretty comparable. Oh, they've done well recently, but for a long time they lagged and didn't perform.
Lag in the U.S.
But when I do research, when I look at some of the international exchange traded funds or mutual funds, if you look into a little deeper, some of it actually has emerging markets in there as well. So you can do the direct emerging markets, or in some of the international, there's some exposure potentially. So, but definitely agree that making sure, are you diversified, and how does this fit in with your overall plan and strategy?
And I think I was doing some research on some EM funds, and I saw NVIDIA. One of them that had pretty good performance, and I'm like, So you really need to know what's inside that wrapper to make sure you're just not accidentally,
Yeah, we're not making a recommendation to buy or sell. We're saying that's just in there.
No, but to touch on your cap expenditure, when you listen to the conference calls, all of the there's so many companies out there, and I'm talking about broad market-based companies, not just technology, that have talked about how they're increasing their capital expenditure to go out and enhance their AI technology platforms. And so the big question, and you hear it from a lot of the technology companies, even though they've done incredibly well, they're running into shortages. And a lot of those shortages are simply supply chain shortages. They can't make enough of this equipment right now to satisfy the demand. Now that's an incredible. That's a good issue to have with a company. And when what we're seeing is that they're really focusing now on where is your recurring revenue growth. And the recurring revenue in a lot of these companies is jumping dramatically because they're seeing their future contracts that these companies want to purchase of their product continue to expand dramatically. So that's another reason why a lot of these companies are looking forward saying, hey, even though we've made some good money this quarter, we're really looking to the next, year to 18 months to expand and have much more margin expansion simply because of our recurring revenue is the future contracts are growing dramatically. So again, it leads to what you were talking about, your AI issue, that Goldman Sachs had come out with. So, again, it's an area that's strong, and again, it depends, as Catherine always says. Hey, what's your risk tolerance? How do you want to diversify a little bit? And right now, these stocks are running strong, and there's nothing wrong. There's nothing wrong with taking some money off the table.
So as you're talking about AI, what came up for me was, so I'm part of a government affairs committee for the Carlsbad Chamber of Commerce. And yesterday I was in a meeting, and one of the things that came up was we were going over some of the job killer bills that are out there. And there were probably about 4 or 5 AI-related bills that came down the wire to us. Last year, there was over 1,000 bills, and only, I think, about 10 of them came through for us to review. But what I'm finding is I haven't seen them get implemented or approved yet, but what's coming down the wire is, how are you using technology to hire a fire, or how are you using it in the healthcare, and so different industries, which we're seeing, but there's actually a lot of regulations and bills that are being out there that they're really trying to hinder, and some of these businesses and companies. I haven't seen it come through fruition yet, but I know there's a lot of talk and bills behind the scenes out there that are really trying to say, figure out, is there a way to maybe slow down, some of these companies. But we'll see what comes. I haven't, like I said, I haven't seen any bills come through yet. I'm definitely watching it and seeing, but it'd be interesting to see.
Is the real issue that they're looking at whether it's a job killing bill?
Yeah.
That's the big issue for
the
them.
ones we're focusing on, but there are a lot of AI related bills, and all the legislative representatives are out there writing bills and trying. But it takes a lot to get these passed. So I haven't seen that yet, but I know it's on top of mind, and they're really trying to find ways to, to limit AI use in some capacity.
I heard something on CNBC. I think it was this morning. A good analogy to this AI build out that everybody is afraid that's killing a lot of jobs, and especially entry level careers. He equated it to the internet back in like '95 when Microsoft was pretty new and came out with their Windows program, and when they started commercially using the internet, there wasn't all these computer programmers, app builders, and software developers coming out of the woodwork. I mean, all of those industries, just have only been around for 25, 30 years when we had that technology. So, I really believe that AI will create a lot more opportunities. We're just not seeing it yet, but it creates things that we can't even imagine today.
So
I agree with that. Yeah. And one last thing, I just want to. I said it a couple of weeks ago. A lot of the software companies had sold off very dramatically. They've since their earnings reports, we've seen a little bit of a bounce, and some of the markets have also caused these software companies to lift a little bit. But what's real interesting, there are a lot of analysts on the street who are now coming out talking about how AI is not going to put these companies out of business. And a number of these software companies that are down 26, 27, even 50% over the past, from their recent highs, are now getting upgraded by a lot of sell-side firms. And I'm talking the Morgan Stanleys, Goldman Sachs, JP Morgans of the world, because they don't see them going to zero. But what they do see is over the course of the next year to 18 months, they utilize the AI technology to, really enhance their platforms a lot. So, they've sold off, and I'm not saying to go run out and start loading up on software names at all. But again, it's just an area that has been completely, I think, oversold because of the issues with AI. But again, these big companies are not going away, and they'll find ways to make money.
So over the last few weeks, a few financial planning topics or things that came up with clients are, we have some clients that are looking at downsizing their home. and are considering buying a property, then selling. And so when you do that, there is potentially you need to come up with the money for those transactions. So we do have a pledge asset line that we've done in the past for clients. There also are some other kind of mortgage strategies. I actually heard from one of my NetForce members this morning about bridge loans and some equity loans and other things that could come into play for 6 months or less. The other thing that we've been looking at is we have some clients that are phasing into retirement and they want to move to a different state, and so they're looking at should I sell my place or should I rent it out? And then the new place, do I do a down payment? So all those different strategies we look at and we can kind of model and see what's the best option in your plans. We can do what's called what if scenarios. And then we also have some clients that we've been having conversations with about some major home improvements. So it's not just a quick, bathroom remodel. It's like, okay, I want to redo my whole kitchen. I want a second story. I want an ADU, which those are a little more costly. And so kind of looking at how does that play into the plan and what kind of strategies or things we need to put in place, or does it even make sense, and how much should we be spending? So those types of things, as we do financial planning, yes, the investing is a big part of this, and we want to make sure your plan works for you, and we do focus a lot of time on our strategies and investments. But behind the scenes, there's a lot of time and thought that goes into kind of different scenarios of, okay, I want to do this, or what about this? And because there's also the tax part of it, which Rachel, chimes in and helps and says, okay, this is the impact. So once again, lean on us if you want to run a scenario or want to look at your situation or do some, I'm thinking of doing XYZ. We're happy to do that for you.
I'm assuming that these people that are moving to another state are looking for low tax.
Well, they actually live out of state too. They live in a different. We do have clients here locally, but we do have a lot of clients from out of state and are moving to different states as well. So it's just yes, but we have seen. Go to
the low tax venue. I was just curious.
We have seen some clients leave California, but usually the ones that leave here, they eventually want to come back, and then it's always hard to get back here once you leave. So
if they sell that house, it's hard to come back. If they keep it as a rental, they got a foot in the door still. So, but
the only thing also what I found with is if you move out of state, that you really need to get to know the area, the weather, the people, the culture, and just make sure, do I really want to be in this area? Because California, it's, we're every state you live in is a little unique, and you just want to make sure you're happy with the area you want to move to. So, all right, I think we covered a lot of ground today, and so the goal is for this momentum to stay, and let's continue to grow. And if you have any questions or if you need anything from us, please reach out. And thanks for your time today.
Please stay tuned for important disclosures. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional. WWM Financial is a registered investment advisor with the SEC.